So without any further delay, let's welcome Mr. Hirpara and start today's session. So Mr. Hirpara, you can please now continue with the session. Thank you.
Okay, all right. Hello, everyone. My name is Darshan Hirpara, founder of Trading Mantras, right? So, today we are going to learn how to trade in options effectively, right? As Nitesh Bhai said, that the strategy will help you to just get a maximum return out of your capital, right? By trading in options. So now we will deploy a chart. Basically, the very first step to deploy the strategy is we will learn by the way on the Nifty chart, right? So because Nifty has a huge volume, so that is the reason why more people are more people are convinced to trade in Nifty options rather than going with stock options and any other options which are illiquid, by the way, right? So the very first step is just to deploy a Nifty chart that is here, right? We'll hide the volume button. So the very first step is just go to studies, okay, and just find average, long and short. We are supposed to deploy two averages here. The first is we will keep it exponential, by the way. The first is 20, second is 60. Okay, as you can see, we have deployed our first indicator. The second indicator we will be deploying is a MACD. Just make it MACD. Do not select MACD histogram. There are two indicators, right? So the second indicator we are going to deploy is MACD, right? So इसमें digits क्या होंगे? First parameter of an MACD is 20. We will keep it everything. We will keep it exponential. Okay, do not change that. Otherwise, there will be a minor difference. The first period we will be keeping it as a 20. The long period we will be keeping it as a 60. Okay. Now done. Okay. And now the third indicator, we will use the three indicators, by the way, to use the strategy. The third indicator is directional moving average. Right? Okay. So here we will see how you can trade in options by getting 5 to 10% every time you are making a trade, right? So there are rules associated with this strategy, right? So let me tell you one thing: these indicators are not a strategy, basically, right? Indicators with the rules and the risk management system makes a strategy, basically. Yeah, you cannot call an indicator as a strategy, right? People are calling indicators as a strategy, just deploying the MACD, stochastic, right? So here the very first rule of this strategy is we will watch this chart in 3 minutes. Okay, हम ये chart 3 minutes में देखेंगे. 3 minutes में ही देखेंगे अभी. Do not keep it 1 minute. Do not keep it 5 minutes. Just strictly 3 minutes. Okay. So I request everyone just to get a notepad handy with your piece of paper, so it will be very easy to write down the things whatever I'm just telling you. Do not write each and everything. Just write down the things what I'm asking you to. Okay. So the parameters and the rules, you are supposed to write it down. Okay. So the very first rule is just keep it in 3 minute chart. That's it. Okay. Now as you can see, we are supposed, okay, so we will talk about the entry point first, how to take an entry. But before that, there are some rules for the time frame, for the time slots, right? So for that, let me just get an pen here. Okay, so there are two slots where which you can use, right? to trade during a day, right? So let me just show you the another screen. I hope all of you can see the screen, the black screen, right? Okay. The very first slot you are supposed to consider while trading, that is, do not immediately start take trades after market is open. Just consider this slots. I don't know why this is not working. Okay, let's just open it. Okay, so the very first slot you are supposed to consider is 9:30 to 11 a.m. Okay, so this is the very first slot you are supposed to consider while using this strategy. Okay, do not trade after 11 a.m. Do not trade because the market will be, market will have a very much low volume, right? So the strategy will work, but 90% of the time between 11 a.m. to 1 p.m. The volume in the Nifty, let's say in the stock market is very low, right? You can say that. So just trade between this time frame. This is the first slot, by the way. The second slot you are supposed to consider is the 12:45 to 12:35 to 45 to 2:45. So whatever the trades you are getting between this time frame, you are supposed to take. Just the time which is remaining between this slot is 2 hours. Just do not do anything in this 2 hours. Okay, just take a break, right? So these are the two slots you are supposed to consider while trading. Okay, now let's come to our strategy. Right. So here we will now talk about the entry and the exit point and profit booking, everything. Okay, so let's start from the tomorrow. Suppose I have kept this chart in 3 minutes. By the way, you can see it here on the bottom, on your bottom right. So whenever you will get a negative crossover in 2069, let's suppose you are getting a negative crossover here, right? Now you are supposed to take a in the money put option, right? So let's suppose you are getting here negative crossover, right? So you will buy a put until you will not get any another positive crossover here. Okay, until you will not get any another positive crossover here, right? So you will exit at here at this point. Now let's suppose you are exited by booking a small loss here, right? Again you are entering at this point when the MACD is giving a negative crossover, right? So at every negative and positive crossover you are supposed to take a call option and put option. Okay, now I have told you how to take entry basically, but there we have deployed a moving average. There is some use of that, right? So let's suppose if the green line, which is basically a 20 moving average, is running above the red line, that is the Nifty is in positive zone. We will consider when the green line is above the red one, we will consider that the Nifty is currently trading in the positive zone. Okay, so we will avoid to take a negative crossover. All right, we will avoid to take a negative crossover, because basically you can see that the green line is above the red one. So basically Nifty is considered as in trading in the positive zone, right? So we will avoid this crossover, right? We will take this, we will take this. So let's see how much you have made by trading in call options. Let me just open another chart. Okay, so this is the I will put Nifty call option here. Call off in at the money call, right? So Nifty, let's suppose Nifty is currently trading at 932, so we will take 950 call. Okay. Nitish, I'm getting too much noise from your background. Can you please mute yourself?
Yeah, yeah, sure.
Okay. So here you are getting a. Let me just zoom it and correct it. Okay. So let's suppose you are getting a positive crossover here. So you are supposed to buy a call option, right? So we will see at what time it is giving a crossover. It is giving at 13:39. You can see the time at this place, right? So we are getting a positive crossover at 13:39. So we will check it out in here at 13:39. That is here at this point, right? So the call is currently running at, let's take a high point 76, right? You just bought a call at this point. Okay, now you are supposed to wait until it doesn't give a negative crossover or in 10 points, or 10 points or in negative crossover in MACD, whichever is earlier. Okay, so it just went from 76 to 84. So you're not getting a 10 points, but it just fallen down after giving just a big spike, right? So basically it just went down to 70. You just bought at 6, right? So you are at this point. This MACD is giving a negative crossover, you can see here, right at this point, right? So you are supposed to exit at this, at what point? 76. So basically you have exited price to price, right? Now this is the case when the markets are choppy, right? So let's take another case, right? So in this strategy you will get a very nominal loss, or maximum time you will exit price to price. Okay, so let's consider this. Here we are getting a positive crossover while the Nifty is in negative zone, so we'll not consider that. We'll consider this here. So you can see that the red line is above the green one, right? Basically, so we are not supposed to take trade according to this moving average. By the way, this moving average is just to decide whether the Nifty is currently running in a positive zone or in negative zone, right? So when Nifty will turn negative, we will wait for a positive crossover. We will not take a trade at this positive crossover. Instead, we will wait for this crossover to turn negative again, so we can take an entry. Okay, so now at this crossover you can see when the Nifty turn negative, when the MACD turns negative, at this point the Nifty is currently trading in the negative zone. So we will buy a put option at this point. At what date? 13:11, 13:03, right? So we will check it out in this call option chart. 13:03 पे you can see here at 13:03 the put option is currently running at 70. Sorry, this is a call options by the way. Let me just do a put options of 11,900, right? Because it is running at 11,900, near to 900, so we'll take at the money call, at the money put. So we'll see here at 13.3. This is 14. This is 13, right? 13.3, the put option was running at, let's take a high point 92, right? If you bought a put option at this price, let's suppose 92, right? And the Nifty, when the MACD turns negative in the Nifty chart, we will watch a Nifty chart to buy and call in options. We will not watch a option chart because it is no option chart is of no use, right? You cannot use in candlesticks over the option chart, right? Due to high up and down, the volatility in the options, all of you can know that, right? So we will use this Nifty charts to take and trade. So at this negative crossover will buy a put option, right? So at 92 you bought a put option. You are supposed to exit by taking a 10 points or an positive crossover in this MACD, whichever is earlier, right? So you'll see here there is a positive crossover at this point. Let's suppose let's see how much it just got up. It just went up to 101, right? So we have bought at 92 around. So if you are not able to book up your profits here, you have 3 minutes to book your profits here. Here if you book your profits here, that is good and well. This is a second point and this is a third point. Even if you book your profit at this, you will be exit price to price, right? So you will get 5 to 10 percentage in this option. Okay, now again this is turning positive, so we will wait for another negative crossover to just happen, right? So there is a negative crossover happening right at this point at 14.18. So we'll see at 14.18 what is the price which is running on the option chart, that is a 19.8, right? So we will again initiate the trade at 98. We will buy a put, okay, and we will take 10 points or an positive crossover, whichever is earlier. We will book profit according to that, okay? So let's suppose you are buying a put at this point 98, and at around, in a 5 to 7 minutes you are booking up your profit here at this point, because there is no negative, there is no positive crossover you can see here, right? So you are booking up your profits at this point, so you will get 10% trade of your whatever investment you whatever the lots you have made in this put option, okay? So in this way, if you count 5 to 10% continuously, and talking about the stop loss, there is no stop loss, by the way. Here you are supposed to double your position every time. So if you are getting a negative crossover here, right, you are supposed to exit when there is a positive crossover. That is your stop loss, stop loss as well as your profit booking point, right? Everything is considered by using an MACD 2069. That's it, right? So if there is a positive crossover, let's suppose this you are getting a negative crossover here and Nifty didn't went down, it just went up. So this basically will give a positive, another positive crossover, and that will help you to exit as soon as possible before the Nifty rise, right, from the put option. So in this way, if you count in 5 to 10 percentage in each trade, right, considering the time slots I have told you, right? So basically you are supposed to trade in the morning, that is the first slot, from 9:30 to 11 a.m. strictly, right? And the second slot is uh, 1 p.m. Sorry, 12:45. Just take this 12:45 to 1 p.m. as in warm up. If you are getting any crossover, you are supposed to take it. Otherwise, just take. Market will make will catch up a movement in this time frame, right? After 1 p.m. it will give a huge move. You can just see the history chart after a 1 p.m., right? Every time after a 1 p.m. Nifty is if the all of the day, if the market just remain choppy, right, after 1 p.m. Nifty will give a definite move on either side. So before the Nifty moves on either side, you will get a signal earlier from a Nifty move, right? So since यहाँ पे let's suppose at this point, not we are just watching option chart. Let's see this. So you just got a negative crossover at 39, right? So you are supposed to take this trade at the second slot. right? You just got exited here. Again, you just have taken a trade at this point and just book your profit, right? So the thing is, you are supposed to respect the time slot as well as the MACD. So do not, keep your position even when there is an, opposite crossover against your trade. So let's suppose if you are getting a positive negative crossover here, and if you have bought a put option, and again you can see after some time if it turns positive, you're not supposed to stay in the trade. Just get out of the trade as soon as possible. You will get 2 to 3 opportunities in a day if you're using a 3-minute chart. Okay, so 2 to 3 trade is just a good, right? Good trades. You are not over trading, and at the same time you're making 5 to 10% over your capital. Okay, I will not suggest you to just deploy each and every penny of your capital. Just deploy 5 to 10% of your capital. Let's say if you have a 1 lakh rupee, 1 lakh as your capital. Okay, just do not deploy all of the 1 lakh in just one trade, right? Just deploy 10%. That isn't 10,000, right? So in that way you can uh, trade this options. I just consider this moving average for the Nifty to decide whether the Nifty is running positive or negative, and avoid the huge spikes. Let's suppose if you are getting a huge spikes like this. Let me just show you. We are not supposed to take trade in this positive crossover since the Nifty is running negative. It just turned positive afterwards, right? So again, we are not supposed to take trade this negative crossover since the Nifty is running positive at this time. Okay, so we will be avoiding this. So we have avoided this huge spike, right? Which will lead to the huge loss if you are if you are taking a random trades in the Nifty options. And by the way, this strategy is considered as an naked option buying and naked option buying, right? You cannot hedge the position using this strategy, right? Okay, so how to decide you will get the momentum? So for that, you will see this at the XR, right? So whenever there is a positive, let's suppose we will remove the 60 moving average. Okay, we'll just consider the 20 moving average. If you're a full-time trader, you can consider this by taking 5 to 6% every time. So we'll just hide okay, we'll deploy just in 20 moving average. Okay, okay. So now this is the second way you can trade using this strategy. Okay, this is the second way. So let's suppose there is a positive crossover here. You are not supposed to take trade until the candle is touching the 20 moving average, right? If there is a positive crossover here, right, you're not supposed to take trade until the candle is above. The candle is just touching, touching the moving average. Okay, let's suppose here the candle formed above the moving average, but you can see at the XR is running negative here, right? You are supposed to wait for two things. The first thing is the candle should be above. After this crossover, you are supposed to be active, just being active to buy and call option. Okay, so now you are supposed to wait for ADXR to just turn green. At the same time, you are supposed to wait to just form this candle above the moving average, right? So you will take a trade about this and near around this. You are supposed to be a very quick whenever you are using this setup. Okay, so you will buy a call option here, and it just went at, let's suppose, 825. It just went up to 894, right? So nearly around you are getting 75 points, not 75 points, 70 points. So the Nifty option will give you basically, let's suppose 30 points, right? If the delta is 5.0, 0.5, you will get, if the Nifty movement is 50, you will get 20 to 25 points. Depends on the day. Whether it's a Wednesday, you will get more points according to the Nifty movement because the expiry is near on expiries on the next day, right? So that is the reason why you are supposed to be more cautious when you are taking trades according to this ADXR. I'm talking about ADXR because you are supposed to strictly take trade when ADXR turn positive. At the same time, candles should be formed above the 20 moving average. Okay. Now the exit point is you're supposed to wait exit and the profit booking, right? The same thing. You're supposed to wait for the candle to form completely below the 20 moving average. Here you can see the candle is forming below the moving average, so you will exit at this point. Okay, 70. So let's suppose you entered at 826, let's suppose 830, and you just waited up to 870, so you will get 30 to 70, that is 40 points. In Nifty options you will get 20 points out of it, right? That is the thing you can do simultaneously using 2060 and this thing. Just use it for the confirmation, right? You will get 2 to 3 trades in a day. You can see here, this is the first crossover, this is the second crossover, and this is the third crossover, right? That is the 3 trades only. Today itself you can see uh, today was the choppy day, by the way. So as I said, just avoid the huge spike. This is a huge spike. Okay, so you're not supposed to take trade at this point. Okay, again, if you are taking a trade at this point, you can see the LDXR is running negative. So we'll wait until it's turned positive. You can see it didn't turn positive. Instead, then this MACD turned negative. So we will take a put option at this price, considering the candle is formed below the moving average, right? It will get easily 5 to 10 percentage in this time, 2 minutes, right? So this is, you can just call it an scalping also, right? Okay, so this is the first thing you are supposed to consider while trading a naked Nifty options. You cannot trade bank Nifty options using this strategy because you are supposed to be a very quick 50 to 100 points movement in bank Nifty is nothing, right? And you know the big players are involved in the bank Nifty also, so you can if you just get into the trade and just get out of the trades, there is a huge fluctuation in between this time frame, right? So it is possible that you will suffer a loss due to the huge spikes, right? Now the second thing you are supposed, so let's close this screen for now. I hope everyone understood this strategy, MACD 2069, right? According to the 3 minute, deploying the just and 20 moving average, and the second thing is 20 and 60 moving average, right? Now we'll just hide the indicators here, ADXR, right? So okay, I'll hide everything in ADX parameters. Just hide everything. Just make it just use ADX to just make it wide. Okay, so in order to just get in clear view, we'll use an ADX just in white line. Okay, so now let's suppose we'll just keep this thing 15 minutes. Okay, and we'll hide this MACD 2069 too. Let's make a new screen instead of just hiding everything out. Let me just close this chart and open a new chart here. Okay, so this is the second strategy you can consider for the option writing. I'm talking about the option writing. I hope all of you at least know about the option writing. That is option selling, right? You can just get in benefit of erosion of an premium, right? So you are supposed to just deploy a ADX here. Just change the color to black. Everything, just make it a black, so only the white thing will be visible. here, right? Now the second thing we will deploy is RSI. That is a smoothen RSI. Okay, that is only available in the spider, by the way. The smoothen RSI, I'm using the smoothen RSI for a long time. This is the smoothen RSI. So the parameters for the smoothen RSI will be 14, 9 and 6, right? 14, 9 and 6, just add it. Okay, so now you can see that the RSI and ADX, we have deployed RSI and the ADX, right? So now let me tell you the characteristics of an ADX first. Rising ADX doesn't always mean that the Nifty will go up. We will watch this chart, by the way, in 15 minutes. Okay, 15 minutes. Watching rising ADX doesn't mean always Nifty will rise, and falling ADX doesn't mean the Nifty will fall. Okay, rising ADX means that the strong is trend. The trend is strong on the either side. So you can see here, and we will just consider this thing in Nifty spot chart. Now we will just make one difference here. We will just add a one level here at 15. Okay, one level at 15, and yeah, so you'll see one thin line here at 15, right? So below 15, ADX is very let's suppose if the ADX is below 15, the market will be not, Nifty will be not in a movement, right? It is supposed to be above 15. That is in here. You can see that if the ADX is above 15, the Nifty is running in a either or running in a trend, basically, right? So we will watch out for the instance when we will get a perfect entry and exit according to this option writing strategy. Okay, so we will use this RSI to decide whether the Nifty is currently running at a negative zone or in positive zone. Okay, now let's suppose let me just so I'm just making this ADX more visible, right? You can see this yellow line is in 15, right? So let's suppose if we will consider the closing of a previous day and the opening of the current day. Okay, so let's suppose if the ADX is falling down from the previous day close, okay, that is the close of an ADX. So you can see here, if the ADX is falling down of a previous day close, and if the RSI is running in a negative zone, right, that is the green line, red line is above the green one, right? So if it's falling down, let's suppose if the ADX is falling down, as I said, falling ADX doesn't mean always that the Nifty will fall down. Okay, so here you are supposed to consider the call and put option 1% on the either side. So you are supposed to take 1% call option far away from the strike price. Let's suppose in the morning Nifty is running at 11,919. Okay, so you will take a call option of 12,000. Okay, you will write the option of 12,000, considering that the Nifty is RSI just got a negative crossover on the previous day, and Nifty is falling down from the previous day ADX close, right? So if it's falling down, you are supposed to write an option. You are supposed to start writing option at 9:30, to be very specific, 9:30. Okay, so let's suppose here we can see as the Nifty is running negative at this point, since the RSI is in a negative zone. You can see the red line is above the green one. So basically it will be considered as a negative for the Nifty, right? since the IDX is falling down here from the previous day close at the, let's suppose 9:30, right at this point, I guess there is some data missing in my spider. I'm not getting, okay, yeah. At this point, you can see that the ADX is falling down. You can see the previous day close was this. You can consider, you will see whenever you will, in the morning, you will itself see that the IDX is falling down or in rising up. So we will consider this candle ADX as in closing. So this candle ADX is running at 29.44. You can see at this point, right? And now at this candle 28.42, right? 28.42, that means that the ADX just opened below from the previous day close, right? So now we will consider the 1% far away call option for the writing purpose, right? So you will consider 12,000 call to write immediately at 9:30 until the ADX is falling down. You are supposed to write, just keep that position. You will see that the premium is falling down until the ADX is falling down. Okay, till the time ADX is falling down, you will see that we are getting handsome amount of premium in this time. Okay, so we haven't seen any uh, you know the up move, the rigorous up move here, right? So now talking about the exit, how to, when to exit. You are supposed to exit your right, the call position which you have written on in the morning itself, on when this RSI will give a positive crossover. By the way, the RSI parameters are 1496. Tino ke tino, we will keep it exponential. Okay, so if you have a rated option at this point 920, you will get the Nifty movement plus the premium, right? That is the bonus part. The movement is the bonus part. You will get the benefit of the premium erosion plus the movement. Okay, so you will exit at this point. Let's suppose the positive crossover is happening at this point. You are supposed to exit after the first candle of a crossover will complete. Okay, so you're supposed to wait for this first candle, for this candle to get over, and when the next candle start forming, you are supposed to book your profits in your call writing. Okay, the same way you will see here, the previous ADX on the 14th November was running at 17. At the opening, we can see that the ADX just risen up by 2 points. That is on 19. You can see here ADX, AD, that is the ADX. Okay, so it just went up to 19. So we are supposed to now write a puts, considering that the green line here RSI turned positive on the previous day itself, right? So at this moment, at the opening, when the Nifty will open at 9:15, we will wait for 15 minutes. Okay, and we will write a put option exactly at 9:30. Okay, so let's suppose, if you let's consider the close of an 9:30, that is at around uh, 9:11,933, right? So at 11933, you are supposed to write a put of 1% far away from the strike price. Okay, so that is 850, right? That is 850 basically. So you will write a put until you will not get a negative crossover in RSI here. Until you will not get a negative crossover in the RSI, you can see that at this point, at this candle, right? At this candle, you just got an negative crossover, right? So you're supposed to wait for this candle to get over. At from the next candle, you are supposed to book up your profits in your put position. Okay, put writing position. So let's suppose the opening price of the second candle is 922, right? You have written the put at 933, right? So in this, how much hours? 3 hours, right? 3 3.5 hours, right? That is 200 minutes, right? In this 200 minutes, the premium must have fallen significantly, right? So you are supposed to close your position immediately when you will see the negative crossover in RSI 1496. Okay, so that is the these are the procedure basically to write and call and put option. You will make 2 to 3% in this 2 to 3% a month using this strategy. If you are following this strategy throughout a month, right? Throughout a month, if you are following the strategy, you will make 2 to 3% minimum using this strategy. Okay, so considering the ADX along with the RSI, you are supposed to take entry and the exit. You are supposed to take an entry and book up your profits. Okay, it will be very rare that you will exit at the in the loss, because if even if the you are exiting at the price to price, let's suppose you entered at 932 and you are exiting at 932 at this point. Let's suppose you are exiting at 932, right? So you will get at least the benefit of premium erosion, right? That will be the huge, that will be the huge, because you are keeping your position until you can, let's suppose 9:30 to 1:15, right? So you're keeping your position for 3 hours or more than that, I guess, right? So you'll get at least a benefit of premium erosion that will be 5%, I guess, of an option price. Okay, of an option price you will get 5%. So this strategy is for the people who have a capital of minimum, let's suppose 1 lakh rupee. Okay, for the option writing, basically, if you are getting a margin from a broker, you can even trade within 40,000. Otherwise, the full margin of a Nifty is, I guess, 1 lakh 10,000, right? So you are supposed to trade one lot in an having in 1 lakh. Okay, considering I have considered the returns 2 to 3% on the 1 lakh. Okay, that is the minimum figure you can make using the strategy, by the way. Now whenever you see that the ADX is touching the 15 line, you can see that this is a yellow line, is a 15 one, right? Whenever the Nifty is running the 15 line and started rising after that, and the RSI is in negative zone, you will get a huge movement on either side, right? So if the RSI is running negative, you will get a huge movement on the downside. So if you are writing a calls at this point, whenever, let's suppose Nifty is started rising from this candle, right? Sorry, this ADX just started, just touched the 15 line at 13:15 wala candle, and from the next candle it is just started rising. So you are supposed to start writing calls at 1:30, right? At Wednesday. This is of the Wednesday, right? So on Wednesday you will see the premium erosion will be very high. Plus you will get the Nifty movement benefit, right? So plus you are getting a Nifty movement plus the option erosion, right? So 5 to 7 days in a month you will get such move. You can see that every time when the Nifty when the ADX just started rising by touching the 15 line and just started rising, you will see that the movement will be huge, right? Here we will not take a trade until there is a negative crossover in the RSI. So we will, even if the ADX is rising, if the RSI is running in a positive zone, we will not take a trade. We will not take trade until RSI is positive. At this candle, you can see the Nifty turn just negative, right? Here. So we will wait for this candle to get over, and from the next candle we will start writing calls. Since the ADX is rising here at this point, at the same time we just got a negative crossover in RSI 1496. Okay, so you will write a calls here, you will get the benefit of the premium erosion plus the movement, right? So that will be the bonus. The movement will be the bonus, right? Every time whenever you're seeing that the ADX is touching the 15 line and just rising up after that, the movement will be huge. Okay, the movement will be huge. यहाँ पे touch नहीं कर रहा, it is just crossing up and down, so we'll not consider that. Okay, we will not write put options here because the time will be remaining very less since it's in closing time, right? Do not keep your option writing position overnight. Okay, do not take it home. Just do everything uh, intraday, because you know there will be 18 hours gap, 18 hours gap between the after the market closes and open on the next day, right? So no one knows what will happen on in that time, so you are not supposed to uh, take keep your trades overnight. Here you can see again that Nifty just touched the 50 levels on the previous day and started rising from the next day, right? And the RSI is running positive. So on 913, you are supposed to start writing puts, right? So from this candle you will start rising. You will start writing puts here from this level 11,300. So you will write a puts of 11,200. Okay, until the RSI is positive, you are supposed to keep your put position, which whatever the puts you have written in the morning, you are supposed to keep position. You can see here that the RSI just turned negative, right? Here RSI just turned negative, so you will exit from the next candle, that is this candle. Okay, so that's it. The one trade a day, that is more than enough. Okay, I hope everyone understood this both strategies. The first strategy which I just taught is an option naked. You can just trade by, you can just take a trade by buying call and put option using the 2069 MACDs all along. And the second strategy I have taught, that is the ADX plus RSI. You can use this combination to write call and put, right? These days, people are getting more attracted to the option writing. I don't know why. Even when they do not have a enough capital, right? You cannot write calls using 50,000 capital, right? You just need at least 1 lakh capital in your trading account just to write using the strategy. Because I'm telling you about the capital, because you are supposed to be on the safe side. If you're losing 1%, 2%, that would not affect your mindset basically, right? So if you're using 50,000 for call writing, put call and put writing, if you lose 1%, that would be 2,000. 1 to 2%, that would be 2 to 4,000, right? And 4,000 loss in 50,000 capital is considered as a huge. Okay, so I'm just giving you you know the advice which you are supposed to keep for the for your capital management. Otherwise you can trade that. No one minds if you are using 40 50,000 capital to write an option. Okay, but you just need at least 1 lakh to just keep your mindset healthy. And at the same time, you will not bother, you will not bother about the loss you are getting on that day if there is a sudden movement like this, right? The RSI is positive and the ADX is rising, so you started writing puts at this position, but you can see that there is a sudden move in the morning itself. So you are supposed to exit at this RSI when this given negative crossover, right? At this point, from this second candle, right? So you will get a loss of 2% maximum in this position, right? So just to avoid that loss, so just make it minimum loss. You just need in capital fund leg, so you will you will be not affected by the loss you will get occasionally, not every time. Okay. Okay, I guess everyone understood the both of the strategy, and thank you so much for having me today, Nitesh bhai. Thank you so much for giving me an opportunity to just teach my strategies to the public here, right?
uh, Thank you, Darshan Bhai, for being with us and teaching our viewers this one of the best strategies to trade in the options. And I hope everyone understood whatever Mr. Darshan has taught us today. And we will all try to implement this and definitely earn and make good profit in options trading. So if you have any queries, could you please shoot your queries in the question section so that Mr. Darshan could answer few of them?
Yeah, if you have any questions, you can ask me right now at this point, so I can answer it immediately.
Yeah, we'll wait for some questions.
All right.
How to get its recording? Yeah, how to read option OI data?
Okay. So basically, let me just have a glass of water first. Okay. So let's talk about the OI data, how to read OI data basically. Here you can just press F5 on the spider screen, opening the Nifty chart itself, right? Or either you can just go to the reports and the open interest report. Not this one. Open NSE derivative summary report. Okay, so you'll just get a window like this here, right? Right. So यहाँ पे you can see that there are mentioned many strike price here, right? So just you have to click active today, near expiry, okay, active today and the near one, and just make it x in an ascending order. Just click here 2 times, okay. So now you can see here the call and puts both are people have the option writers have written call and put on the both side today, right? You can see that both are the negatives. The puts are also negative and the calls are also negative, right? So when you see that on the top of this window, you if you see that the call is, let's suppose if the call is in the green side here, 20 24 plus and 34 35 plus, and at the same time if the OI change is in the is telling us in positive, let's suppose this is in green, right? And even if this change will be in the green, you are supposed to consider that the market will turn up, market will rise, because people have written puts on the different side. So if the calls will be on the positive side, on the change of an call will be positive, at the same time the OI change should be positive. Okay, so you can consider that the uh, more people are buying calls in the market, and option writers are selling puts at the same time. But you can just have a watch on this window, right? It is very useful. The spider has provided this window in a very accurate manner, right? So you can use this window where, let's suppose if the in the morning itself the puts were green, puts were in the green side, right? So I'm writing more of the calls today, because you can see that according to the strategy we are supposed to write a call, right? We are supposed to write a call. If the puts were in the green, you are supposed to write a call. If the calls will be in the green, you are supposed to write a put, right? Do just opposite. If you want to buy calls and put, you cannot use this window. You can just use this window to write an options, okay? Because you will not get an exit and entry and exit according to this window. This window will be used only for the sole purpose of knowing where the where the big funds are hedging the where the big funds are writing their uh, call and put position, right? So you can just use this window to know whether the calls are active on the bullish side or whether the puts are active on the bullish side. If the puts are active on the bullish side, that means that the more people are then 80 to 90% people are bullish on the Nifty currently, okay? And use this ADX in the RSI strategy, this ADX and the RSI parameters to get a perfect entry and the exit, okay?
Okay, so this will be the end of the session for today. Viewers, if you have any queries and if you think that we haven't answered any of your questions, so please email us your queries at marketing@spidersoftwareindia.com. Our team will be happy to help you. And I'd like to thank Mr. Darshan for coming and joining this session and training our viewers with such informative and great knowledge. So thank you very much for that, Mr. Darshan.
Thank
So
you so
let's
much
just,
for having.
yeah, yeah. So thank you everyone. Let's close the session now. Signing off, Nitesh More. Thank you.